Bitcoin, it's a lot easier in terms of you can put in generally the average trader or investor can put in a large position and not encounter any sort of major slippage or liquidity issues. When you transition into the altcoins, this becomes more of an issue. So when you're dealing with, say, six-figure positions, you're trying to get higher than that, it's not that much of a problem on Bitcoin. You only run into issues a lot higher up. With altcoins, depending on market conditions, even an order as low as 10,000 can cause major slippage, let alone say 50,000 or 100,000. So they're as a whole less scalable and a lot more dependent on market conditions. When the market is extremely excited, a lot of liquidity gets added to the altcoins you're trading. There's a lot more volatility and it's a lot easier to trade. You're less likely to experience the sort of slippages that can completely wreck any system. If your stop loss takes a few percent, just a few percent of slippage, and you're not going for a short-term trade, that can take you from, say, 2 risk to reward ratio to something less than 1 very easily. So there's a lot more difficulty, there's a lot more stress, and that's why when market conditions aren't suited, I'll be trading Bitcoin a lot more, or Ethereum, or larger coins. But then when the market conditions shift, like they have right now in 2020, it becomes a lot more lucrative to start trading the altcoins. I mean, that is my introduction. If anyone would like to jump in, add, or expand on any of the points I've made.
Yeah, all right, I'll add. Great points. I was sort of an adamant anti-altcoin person for a long time. I always said that they're kind of just like VC investments. You're just punting, hoping that 1 out of 20 will do well. When it comes to trading altcoins, I try to follow pretty strict guidelines. I want to find something that is, as you said, they're not nearly as liquid. But I want to find something that is highly correlated to BTC. And what I'm trying to play is more or less a higher beta relationship to BTC, and essentially using BTC as that laggard and leader relationship. What I think happens in altcoins is they're awesome momentum plays. They're a lot more fickle than BTC, so they don't have the type of collapse spread that BTC has. So they're going to move a lot more loosely, which does make it difficult to manage risk appropriately, because you have to, you could incorporate a ton of things into trading BTC. You can incorporate, as far as defining your risk and doing that properly, you can incorporate daily volatility, you can incorporate market structure. There's a lot of different ways which you could say that your trade would be invalidated. With altcoins, again, just as a function of their lack of liquidity, it's difficult to do that. It's more of, in my opinion, a gamble. And one of the things that I think is, the way that I would look at altcoins is, I think that the opportunity becomes a little bit more in the rear view when you actually see the spreads collapse. So in the beginning of momentum, you'll see that the spreads are relatively wide, the volume is relatively low. Market impact is pretty high if you're adding anything of substantial size. And one of the signs that sort of the end of the move is near is the fact that spreads have collapsed. You got a ton of volume in the asset, and it's went through a massive relative increase in just a short amount of time. And it's more or less this game of, find the asset that's kind of thin, that is moving on momentum, ride it out for that short period of time, and then be willing to just completely emotionally divorce yourself from the idea that that was going to carry on any longer, which I think happens a lot in crypto. The idea that, it's moving and then you're just going to extrapolate on that. It's going to continue to outperform for the next year. That's kind of just an extremely dangerous path to go down. So for me, alts are, they're high beta plays on Bitcoin, on positive market conditions. So if the secular trend is up, I'm willing to be in altcoins. And if it is suddenly that, BTC is kind of in a precarious position, at that point, I'm not willing to be in altcoins because there's so much more downside capture.
Great points. Really love how you link the general importance of watching Bitcoin. And I've actually found more so this year, Ethereum as well, and what they're doing, especially when you're trying to trade altcoins, they are linked. If there's a major move on Bitcoin, or newly for me in 2020, Ethereum as well, it's sort of like a leading indicator as to what's going to happen next. And whatever setup you have, especially based on technicals, can get absolutely wrecked when there's a big movement coming from that side of the market. Does anyone have anything they'd like to add on our first topic on talking point?
Sorry, Koroush, sorry guys, I need to stop you for a second because I've seen that the beginning of the live stream didn't really got into the YouTube. So I just wanted to mention again about the puzzle. So just for the people who are watching, we strongly encourage you, all of you, to actively comment and express your views on the discussions our guests will have, because during the live stream, our guests will be answering your questions. And if they choose your comment, we will gift you with a $50 trading bonus. And as most of you might know, we have started our Phemex challenge last week on September 3rd, one that comes with a 4 BTC reward for one winner. The Phemex challenge is over a month long, and we will be posting a new puzzle riddle every 2 days. The actual puzzle or riddle may be anywhere. The more you engage with anything and everything Phemex related, the more likely you are to find our puzzles. That is social media channels, websites, or live streams like today's. We usually announce hints on where to find the next puzzles on our Twitter, and we'll announce the final puzzle and the conclusion of the challenge when the time comes. Everything will make more sense in the end, so don't worry. We really encourage everyone to try your best and join the hunt for puzzles, because I think the prize is worth it. And as you've seen already for today, we're having Jack Tao, our CEO of Phemex and co-founder. We have Scott Melker, we have Josh Rager, we have Cantering Clark, Ryan, and our main host, KoroushAK. So sorry, continue the, the conversation, the discussion, and I just needed to make this little intro.
Oh, no worries. I hope everyone caught that intro. Thank you very much, Victoria. Yeah, so the first topic again, me and Ryan have just spoken about the difference between altcoins and Bitcoin. If Jack, Scott, or Josh have any particular viewpoints or opinions they'd like to add to what me and Ryan have said, feel free to. If not, I can move on to our next talking point.
Yeah, I want to add something. I strongly agree with what Ryan said. And liquidity, he made a great points, although that his background a little bit distracted. And so what I want to add is liquidity is very important, especially for new assets. And so there are lots of irrational trading happening on this DeFi sides. And it is true that because the huge return and the surge on the price of those altcoins, and people want to get into this market, but in the end, you do need to look after that. Who is listing this exchange? How many exchange has listed this? What's the background of the team, and how good their product is, whether their product has been audited. Those facts all need to be considered. And this is very important if you're looking for a long term, right? This is very important. Even for short term, that this give you some basic idea that how much money you want to throw into this, right? Otherwise, you're basically gambling, not doing the right trading.
Thank you, Jack. That's a great point, which I 100% agree with, because this is something I've actually only realized this year. Before, I used to purely focus on the price data and nothing else. But let's take a look at history right now. We've seen what's happened with Sushi recently. We've seen what's happened with Matic not too long ago. These coins have literally dumped completely, like about 80, 90% plus. And if you bothered to do what you just mentioned, look at the fundamentals, have some basic idea of what's behind this company, you can strongly mitigate that risk, because you can go in knowing that, it's pretty unlikely this project is going to pull something as unexpected as that. Again, a big difference between altcoin trading and Bitcoin trading.
That's right.
Totally.
Perfect. Well, then I guess we can move on to our next talking point, which is specifically the similarities between what happened in 2017 and what is happening right now in the altcoin DeFi market with crazy pumps all over the board, kind of like this universal cash flow into crypto, like the market cap's just going up and up. Arguably, the behavior is quite irrational, as Jack said. The valuations don't quite represent what's actually happening in a lot of these cases. Ryan mentioned this earlier as well. There is a bit of a cult following to a lot of these altcoins where people expect the price to continue going up no matter what. They reject all information, which is suggesting that that is not a possibility. Any one of us with a large Twitter following that has posted anything negative about any of these assets has experienced this sort of backlash. So yeah, what similarities have you guys seen between 2017, 2020, and how has that actually helped you trade this 2020 altcoin market?
Funny, if I wasn't on this live stream, I would have thought you were just describing the stock market in 2020. And so I think that, first, I just think that that's the nature of markets at this time. Since the drop in March, I think there's been some obviously irrational exuberance. We've seen people like Dave Portnoy obviously driving, retail traders on Robinhood into some irrational decisions. We've seen bankrupt zombie companies do 8Xs in a week in the actual stock market. So I think that a bit of what we're seeing now is more symptomatic of the market as a whole and less necessarily about the crypto market, which is interesting because that definitely was not the case in 2017. That said, there's obviously echoes of the 2017 ICO craze in the DeFi space now. Anyone rationally can see that most of these are money grabs. They're hastily put together projects that are there literally just to pump and dump. That's not to say that a lot of them will not succeed or that the DeFi space in general could be revolutionary, because I think that it is. And I think that, when you can put money in a bank and get less than 1%, which may be zero very soon, obviously there's a lot of appeal to DeFi and to be able to actually get yield. That said, we all look back on the 2017 ICO craze as if it was just insanity, and it was. Those projects, though, took months ahead of ICO. They actually planned. They wrote white papers. There was a process. So they were almost more established and real than a lot of the things that are happening now. I mean, we've seen projects now be conceived, released, and then listed on major exchanges within 2 weeks. Like talking about like it was literally an idea. It wasn't even an idea 3 weeks before and is already being listed on a major exchange. That's a slightly different than the ICO craze in 2017. On the flip side of that, though, in 2017, people would raise hundreds of millions of dollars for a project that probably required like 500 grand, and then what do I do with all this money? It's just, it was literally insanity in that regard. And these are raising a couple $100,000. They're actually capped. They're kind of smaller things. I think your risk is a little different, but there's echoes of 2017, but I think it's more just markets are pretty exuberant right now. And it's a symptom of that.
Yeah, well, I love the comparison you made to the stock market, because at the end of the day, it's the exact same emotions driving both markets. There's, you can say, show me the price data and I'll tell you the news. It applies everywhere. Like, well, when the price goes up, everyone is following their emotions, not the actual value of the company. That is what we do as traders. We try to predict these emotions, find repeated patterns, and make money off of them. You also made a great point about the quick listings, which I really liked. That's one of the reasons I love working with Phemex so much. They take their time to carefully select the projects they add. They don't just add absolutely anything that is going to make them money, which again, it's something that separates them from a lot of the other exchanges that add anything without any sort of strict vetting process. Does anyone else have something they'd like to add to this 2020-2017 comparison? No? Okay, fantastic. Well, we can move on to our next point, and this is one of the ones I'm looking forward to most, and this is what altcoins we have been trading and why. So I'm happy to start. I don't think it's any secret that I have absolutely been loving trading Link. I've been doing it from the $3 mark all the way up to the $20 mark. It's been amazing. Phemex is one of the only platforms that offers 20x leverage to trade it. So best place to do that. And when it comes to community, Link have one like no other. I'd say maybe only XRP can compare to the religious following that Link has. And Jack, as you said earlier, Link has that fundamental backing to it as well. It's a first mover Oracle project. It's got a diversified use case. So not only does it blend into the DeFi space right now, but it's so useful that it expands into multiple other areas. Diversification is key for trading, and the fundamentals are diversified. If one area fails, there's a lot of other areas it can succeed in. Why it's a solid project to be listed, and why I have been focused on trading it so much. It's got the liquidity, it's got the uptrend, it's got everything you want to be trading this asset. And yeah, that's been my main asset to trade during this run. Those are my reasons. And yeah, if anyone else wants to take over on what they've been trading and why during this run.
Yeah, Link, it's a great project, and I think the value has been recognized greatly these days. As you can see, that the trading volume significantly increased since the surge of the DeFi project, and and we can see that lots of liquidity in exchange. Phemex is one of the best liquidity for Link market for the perpetual contracts, and we have many records days. So this is this kind of project is that what I'm talking about. It has been proved, at least to some extent, have been proved over the time. And so to trade on those assets with liquidity with the volume, and it's less risky, and also you can use. Lots of users can utilize their mature strategies to trade on those without worry about slippage and other systematic risk.
Yes, yeah, I can also add that slippage, for example, I have associates who have been simultaneously testing the slippage across Phemex versus a few other leading platforms. And since in July, you guys brought on 2 new market makers, it has been consistently on par, if not better than most other leading platforms. So fully agree there. One of the best places to trade that. And yeah, does someone else want to share with us their altcoin trading experiences this season?
Yeah. Oh, sorry, Josh.
Go ahead. Go ahead. You go ahead and I'll go last. Or I'll go after.
Co-founders.
Maybe finish each other's sentences.
So I've been taking a lot of short-term momentum plays that I wouldn't normally even look at. And Scott touched on a great point in the last topic, that there's this weird detachment across all markets right now. So there's really nothing unique about crypto in that sense at the moment. As far as like what I look for and trading altcoins, Link actually, I don't really like to get too down the rabbit hole with regards to what the project is actually doing and fundamentals. If it's on an exchange like Phemex, that's good enough for me. All right. Someone else is doing the work of vetting that project. When I start trading something and then looking into the fundamentals, I feel like that is just one more reason that I might not hit the sell button when I should, because you start telling yourself a story and a narrative about, the success of the project. And I'm really trying to keep things as isolated to technicals as much as possible. But the great thing about Link, and the great thing that ends up helping a lot of these altcoins, is does it have sort of this viral nature to it? And, you mentioned it with Link, that has that cult following. You have the Marines. Anything that can be, shared and understood, immediately when you see that, Marines, no one thinks, and this is kind of, sad at this point on Twitter, no one thinks when they see someone on CT mentioning Marines that they're actually talking about a branch of the military. They know immediately that connection is with regards to Link. So it has that sort of cult following and that viral nature to it. And I think that that's one of the sort of requisites of any good altcoin momentum trade, because again, that's the kind of thing that creates that anchor cognitively, that brings on, the herd behavior, right? Which is responsible for your momentum, with short-term momentum and short-term volatility. So Link absolutely is sort of the, sits atop of the totem pole in terms of alts, because not only does it have, the viral nature and that cult following, it has incredible liquidity, compared to everything else. I think in terms of correlation, it's probably like a 0.9 compared to BTC. So you could, again, you keeping that in mind, you're playing the high beta off of BTC. And I think that it's probably going to, while it will outperform, for the coming months, it's a great play off of Bitcoin and off of the general health of the market. So Link is absolutely, top of the totem pole. I probably could have taken advantage of more opportunities with Link, but it's something that again, I'm sort of dipping my toes back into altcoins again. The DeFi thing has just been, it's been a whole different ball game. It's kind of gross how things have worked out. They are, like Scott said, they're just moving without really any development at all, because in crypto, there's really no speed bumps, right? There's no gradual adoption. There's no IPO process and then, exchange listing and slow gradual growth. It's like idea listed, boom, narrative, takes off 2x. But Link is a phenomenal asset to trade. Link, absolutely. And I thought Tezos was a good sort of Link laggard, but it appears that relationship has somewhat disintegrated.
Yeah, I also noticed that relationship at the start. Now, Ryan, you are one of the most, I'd say, as far as the Twitter space goes, one of the most experienced traders we have. So I'd like to make this a little more conversational as well and ask you a specific question about what you said. So you do try to ignore fundamentals and focus on the technicals, which I do almost fully agree with. The fundamentals are almost like a binary test I put in place, whether this asset is to be traded or isn't. But then wouldn't the virality nature, which you're looking for when you're looking for that cult following, wouldn't that kind of count as something outside of technicals and kind of necessary to incorporate into the system? Yeah, so I mean, I always I joke around and say, I don't care about the technicals. I care that other people do. All of this stuff gets very detached immediately from any kind of true value, right? So I care that other people think that it matters. So if it's a compelling story, if it's a compelling narrative, great bullet points, great website sort of thing, right? I know that Link is a true project, right? As I said, I let other people that are smarter than myself take care of the fundamental analysis. The virality part is, that is, you could sort of, I guess you could, depending on how you spin it, you could, in a way, spin that into a technical feedback, right? You could say, all right, you could chart that. This has, grown over time in terms of Twitter posts, and, we reach an inflection point at some point when it's shared by this and many accounts, and you could definitely quantify that, I think. Not that I've done it, it's more or less some kind of observation. But I try to.
It's being done. Yeah.
100%. There are hedge funds that are small crypto hedge funds. That pay attention to that. Anything that can be paid attention to in traditional markets is being paid attention to. In the traditional space, you have hedge funds that are even an older idea of looking over mall parking lots to pay attention to the kind of traffic that stores are getting, right, to make decisions that are 2-3 years out. So it's it should be no surprise that they're paying attention to Twitter for crypto. But I don't try to get too involved in the fundamentals, because again, I try to reduce my approach down to just a few things that I know are within my control, or at least observationally are within my control. Once I start going down the narrative loop, I can lie to myself, because people can lie to themselves. They could start, saying, oh no, it's a great project. It goes from a short-term trade to a long-term investment. So.
Wow, fantastic response. I know I certainly learned a lot. It was almost selfish because I wanted to learn from your experience, and I hope the listeners did as well. I mean, anything you can put actual figures on, and there absolutely are quite a few. I think there's 4 big data companies trying to give that sort of information out right now. Personally, I'm looking to put a team together to start gathering that data and make it into something actionable. So listeners, if you want to trade altcoins well, get that sort of data together, make it quantifiable, try to put discretion is important, but try to minimize it wherever you can. Whatever you can put into simple measurable data is going to help your trading a lot more and help mitigate those sorts of emotional mistakes which you can make. Now, I know, Josh, you had something you wanted to add as well. And I think on your feed, I've seen a lot of DeFi involvement, a lot that I've missed out on. So I'd love to hear your experience on trading these altcoins and DeFi hype.
Yeah, I'm almost embarrassed about what I've been trading over the past month, to be honest. So I don't post a lot. I do post some on Twitter, but not everything, just because, as we talked about earlier, the lack of liquidity, the volatility, and the high risk of getting what we call rug pulled is very real, with a lot of these. And rug pull, if you don't know what that means, it's basically a scam that eventually they take out all liquidity, or they exit scam, right? And so a lot of these are also on the DEX Uniswap, that a lot of these are being put out on, and then they, like you said, get on these major exchanges in 2 weeks. But basically, yeah, this is just really a crazy time where the market's been flooded by a lot of irrational things, right? And the assets really have no fundamental value. But at the same time, if you know what you're doing, you can make a decent profit, but there also comes with risk. And so what I say about that is that definitely, yes, continue to trade majority. If you're a trader or if you're an investor, continue to look at these major assets, Bitcoin, Ethereum, Chainlink. And if you do have the ability, make sure that it's very, very small amount if you're trading these higher risk assets, right? So, but I've traded a lot of these DeFi assets, and really what's hot right now is yield farming. And so basically what that means is that you're staking your coins in order to earn their token, and from there you can sell it on the exchange. And the issue with yield farming, if anybody's interested in it, is that you have to be early, because if you're late at yield farming, if you put your money into the token in order to yield farm, the people who are there first, especially the bigger players, are going to dump those coins as soon as they can. And a lot of times when you yield farm, you actually get the highest yield when you yield farm like USDC, a stable coin, and their token that you're actually earning. And then in the end, you end up losing value on it if you end up buying that on exchange. But outside of DeFi, that can be a long story in itself. Probably one of the things that I've been looking at and that I'll continue to trade is Polkadot. And that, you guys have seen that it's, what is a top 7 asset right now that recently got put on the market. And not only Polkadot, but really this Polkadot ecosystem has been really hot, right? And so if we want to talk about potentially assets with better fundamentals, I would certainly look at Polkadot, and then also look at different assets on the Polkadot ecosystem. I do believe, just with the crazy gas fees that we've seen with Ethereum, right, lately, and just the inability to, quote, scale, I think that Polkadot has a place in this market. And I believe that it's going to continue to do well along with majority of these assets on the Polkadot ecosystem.
Thank you, Josh. That was actually a lot of useful information in that. I'd like to start by saying everyone listening to this stream and everyone in the space who's looking to trade or invest, they're not doing it to save the world. They are doing it to make money. That is the end goal. Now, there is a difference between playing the game to make money and playing the game disingenuously. So the issues arrive not in the fact that people are investing with the intention of making money. The issue arises when people share disingenuous information in order to mislead you. The misleading part is where the ethical concerns come in, not the fact that someone made money. That's the aim of the game. It's generally a zero-sum game. There are arguments against that, especially with a longer-term perspective. But for you to make money, especially in the short term, someone else has to lose money. We're all in this game to profit, and that's how it is. There's a lot of virtue signaling in the space that doesn't take that into account. I'd also love what you mentioned about yield farming, and helped, just following on this example, inform people that if you're yield farming, everyone's there to make money again. And the early players are the ones who are going to make the most on money. Now, there's still opportunity for money to be made there, even in the biggest scams. Let's go all the way back to BitConnect. Some people made millions and millions on BitConnect. Was it a complete scam? Yes. That doesn't mean there's not opportunity there to make money. And that's where stuff like educating people on general risk management becomes extremely important. Manage your risk, control your exposure, know that nothing's certain, and play the game. Like, that's all there is to it. The issue only arises with disingenuous information. And that would also finally end my point with risk and reward are correlated. If there's extreme reward, be humble. Like, I've been reading a lot of Ray Dalio recently, and him, along with every other incredible trader or investor, takes a humble approach. They don't assume that they're able to find the best inefficiencies in the market and there's no risk attached to it, just purely upside. They go into everything knowing that risk and reward are correlated. If they're expecting to make a lot of money, they're also prepared to expose themselves to equivalent downside. And as we're talking about altcoins, this is a key thing I'd like to stress and all our listeners to know about. Okay, so now we have time for, I think, one more question, correct, Victoria, before we have to move on? So, I mean, following on from my point, one of our topics we had planned was generally investing long-term in altcoins and the dangers of investing in altcoins. We've touched on this topic. I've accidentally given the introduction for this topic. So I'd love for someone to follow up and talk about how they approach investing in altcoins long-term and what the dangers are. Just make sure that people know anything I haven't mentioned, anything you'd like to add.
I think Josh just actually kind of hit on it in general, accidentally talking about DeFi, but it's probably the same thing for everything, is that don't ever believe that you're early, because you're not. If you're just buying something when it's actually hitting, somebody else has already bought it for a tenth of the price. And that's just the reality. And many don't know, but the new game in town right now is yield farming, yes, but it's really private sales and pre-sales. And that's what people with the big money are involved in, and those have different variable lockups depending on the project. Some of them, very, very real ones, someone has to invest but is locked up for a year. So you don't necessarily have to worry about them dumping on you now. But a lot of these projects, as you touched on, people get 25% of their coins right when it goes live, and then another 25% after a month, and another 25%. There is absolutely nothing wrong with that, by the way. It's the same thing as venture capital. IP, like you said, they're taking risk. But when it's hitting an exchange or when it's coming live or when you're hearing about it, there's already people who are probably have done a 5 to 10x on those things. So those are the true investors, right? And those investors need you for their investment to become a 50 or 100x, but that may or may not happen. So my approach to investing in altcoins is it's just something I generally don't do. I view the altcoin market generally as a way to increase my Bitcoin stack. I don't think there's any mystery about that. I don't trade USD pairs generally. I just trade Bitcoin pairs because for me, that's just the way that I view the market. That said, the way that I will become an alt investor is if I've done incredibly well and I take 10% of my original position and put it aside because now I'm playing with the house's money and there's no reason not to hold that and see if I get lucky and in 5 years I do 100x. So I'm happy to invest in a project that I've traded exceptionally well because I'm only using a portion of what I've earned to become, an investor. The flip side of that is what actually happens to everyone is that they start as a trader, then they are forced to become an investor when the market drops, and then they become a passionate community member when they, emotionally need to see their asset rise. And we've seen that with a lot of people who will forever be holding bags from 2017. And that, unfortunately, that's the common path, I think, to investing that you don't want to take. But I would say that, if you have the opportunity to get in early and have done your research and find something fundamentally that you view valuable, then yes, you can put a small amount of money. I mean, I always talk about with DeFi, since there's no stop losses and I generally don't take more than a 1% portfolio loss on any trade, I will only use 1% of my portfolio on anything with the assumption that it will go to zero. So I'm talking about very, very tiny relative positions for me if I'm going into anything like that I view as even a trade in that market.
I think great. Sorry, guys. Someone else going to say something?
Go ahead. Go ahead.
I think it was a great point that you said, Scott, playing with the house's money, and that's kind of what I have done for a lot of the trades that I've taken, especially with the DeFi stuff. I still approach it with like a you never know attitude. And the last thing I want to do is see that 5 years down the line, a DeFi project that I was trading for, short term ends up putting out some ridiculous asymmetric returns, right? The last thing that you want to do is be the person who sold Amazon at $100. So what I do for the trades is I do leave on a small bag, just a hopeful bag, a venture capital bag. But in regards to investing in altcoins, the tough thing about investing in altcoins is there's no, you're exposed to, not only do you have idiosyncratic risk, but you have systematic risk to BTC. And then BTC has systematic risk compared to the greater markets, because we've seen that correlations, obviously all correlations go to 1 whenever markets are, experiencing a negative event, or when something like the S&P pulls back, BTC decides that suddenly it wants to be like a legacy asset as well. So in investing in altcoins, I can never really, I don't know how I would put it. I would say that, again, it comes down to, it's like a VC investment. I leave 20 small bags on and hope that maybe one returns, 10x over the next 5 years. But it's very hard to, I think, diversify, which is a diversification is kind of a, over-parroted, misunderstood thing in the traditional space. Everyone reads like Benjamin Graham's book, The Intelligent Investor, and here's Warren Buffett talk about diversification. They think that, that means you just own a ton of different assets and you'll be protected. It's not really the case. Even Warren Buffett doesn't really diversify. He makes informed decisions with a few picks. Right. But even in crypto, it's very difficult to diversify. There is no real diversification. Downside capture is massive downside capture is massive when you're in a basket of alts. And by that, I mean that when BTC underperforms, those alts, they just fall right. It's like 70% off the board immediately. How can you put real money behind that? And, there's really nothing, there's no floor, right? In equities, there's at least a floor. When equities drop, people step in because they're like, listen, Apple shouldn't be at 150 or Amazon shouldn't be at such and such. I'm going to buy it because it's a long-term investment. With crypto, there isn't. It's just lower prices beget lower prices, higher prices beget higher prices. But Jack, I know you wanted to say something.
Yeah, I want to add a couple points in terms of the danger. So I really want to warn investors or traders that you have to look into projects that they are not being audited or well tested, right? I was before the yarn that I was talking in my team, say, hey, when we look into this project, say how they tested their code, and I know that it's very hard to make those contracts work properly, and there's a lot of like small things you have to take care of if you're not an experienced developer, and it's very easy to make mistakes. And we have seen this kind of disasters happening in many kind of smart contracts projects, right? It's happening again, and the YAM won't be the last one, right? So the other thing I want to talk about is that maybe that it's easier if you really want to trade. It's easier to sell instead of buying. Right, so it's the majority is when they just formal, right? Because it's all marketing game, right? Lots of projects and they have partners and they just shelling and they want to encourage people to buy the assets. But if you're thinking another way, maybe selling is a better trading strategy. As we can see that there are a lot of patterns we can find that maybe sell is easier. Right, so that's something I just personally noticed, and the third thing I want to just add the previous question, what's the major difference compared to 2017 is during that time they only have spot markets, they don't have a derivatives market, so which makes selling much harder, right? There's no margin at all at that time. So there's only formal and everyone's buying on Coinbase and whatever the exchange offer the coins, right? So that's one of the main reasons that the price surged up and up until the bubbles and the bubble's gone, right? So this is, but 2020 is different, right? There's so many derivative exchanges, right? And even most exchange listing those DeFi projects, and they also offer derivatives. So you can buy and sell. If you think that the project goes shit, you can manage your risk. You can try sell. I think that's also back up my previous point that maybe selling is a better trading strategy.
That's a great point.
That's a really interesting point. Specifically that derivatives are newly added and not so much here in 2017. When you say sell, are you referring to hedging your positions using derivative products and helping control your risk? And how do you think that is going to affect, specifically change 2020 relative to 2017 with the extra derivatives in the market? Is it going to be accelerated relative to before because we have more leveraged products? Is it going to make it shorter? What specific effects do you think that will have, Jack?
It's really hard to tell that. It's those projects, as I mentioned, you have to look after the outstanding tokens available in the market, right? So if there's some tokens that only have a very small portion of the tokens minted, right? And if you look into the order book, it might be manipulated. The price is easy to be manipulated. And as Ryan mentioned, that they probably have the price movement is similar to Bitcoin. And we see this pattern that actually we are thinking about making some signals to the clients, say if that we think this is a peak over the period, right? So maybe it's a good time to sell. So that's some patterns that statistically that someone can do. That my team is trying to work out this kind of things. Maybe we can offer some products. That's something we're thinking about. I did sell a little bit on one of the token, but it's a very small portion, just to test the idea. And that's something I would say it's a very maybe a good strategy.
Perfect. Thank you very much. Victoria, I think, you can take over now.
Yes, actually, thank you for this great altcoin discussion. We also wanted to talk a bit about our newest algo trading feature, that is bracket order. As you know, we are the only derivatives exchange in the market that introduced and offers that feature. But I think it needs some explanation by professional traders who can actually tell us how it helps them trading.
Okay, well, I mean, I think I can try simplify the idea of a bracket order for our listeners. How it works is we bring in a limit order. We place our limit order, and then as the name implies, we get bracket orders around it. Once the limit order becomes activated, there is then a take profit, market or limit, and a stop loss, market or limit, that gets activated. Now, these are also OCO. What does that mean? It means one cancels the other. So if there is a partial fill on your take profit, the stop loss will adapt to that. And same with the other way round. Also, when one order gets canceled, the other gets canceled. It's a useful tool, helps you manage your risk. And also, like I always like to say, if you enter a trade and you don't know where you're going to exit, you're probably gambling, you're not trading. So what this really does is you enter with a plan. It forces you to have a plan as you enter your trade. That's my quick introduction to bracket orders. I'm sure Jack and Ryan and Josh Scott can add to this as well.
Yeah, bracket orders, it's an awesome feature if I just add to that. And thank you, Jack, for adding that so quickly. You and Max are just, that's the one thing that's awesome about Phemex. You know, if you have an idea and, you know, it's a legitimate idea and they want to satisfy the traders, right? And have the best available features. The great thing about the bracket order, not only what you mentioned, is that, you know, conditional orders and having this sort of this friction removed in the process early. So putting your take profit and having your stop loss and be able to do that all at once. That's something that, you know, we take for granted because in the beginning, there weren't crypto exchanges that were offering this. You know, on an exchange, you had to have your order on and then you had to create a stop loss and then create a take profit, and it wasn't all bracketed in one package, which is great, right? Any way that you could reduce that friction or that process should be able to translate to some positive result in your trading. That being said, the great thing about the bracket order is what it allows you to do. You could take opposing positions. So it allows you to essentially act like your own pop-up market maker. Okay. I think a lot of people forget that if you wanted, you could actually try to help, provide resting liquidity and be compensated for that, right? So if you're using a limit order versus a market order, you're going to get paid 2.5 basis points. All right. Now, if you are doing this a lot of times, you think along the lines of higher frequency trading, those small incremental gains are going to add up. All right. So acting like a sort of pop-up shop market maker is a benefit, because if you're in a period where, let's say, the environment is really tight, you're seeing that it's a choppy environment, and that, maybe you have some sort of metrics that you've been looking at, and when price is acting like this, we could expect that, the daily range will be $200, and, however you maybe model this, you could set up bracket orders to really try to play like the ping pong between those levels, and to capture not only, that spread, but also to capture that maker rebate. So I think that that's one of the better features. Obviously, this is sort of an esoteric feature of bracket orders, but you're not going to be, unless you're sophisticated, this is not exactly market making. You're not going on and delta hedging on other exchanges and getting into really the nitty gritty of market making, but it allows you to take advantage of what they could take advantage of, which is getting paid for periods where you really might not be able to trade, right? If price is stuck in a small range, what are you going to do? The trade is not really that long directionally. So you might as well, try to help provide resting liquidity and take advantage of that. I'm sure Jack can definitely describe this a lot better though, because he created it.
Yeah. So actually that's the idea is coming from our community, and it's quickly escalate. And we do look into this new algo that we think it's a very good product in terms of that. We know there's a lot of traders and there are lots of bots, institutional clients to use API to trade, right? When I look into this is that the bots has lots of advantage compared to the manual traders. And that our platform needed to balance and say, hey, so we look into this and we find this is a very good tool to help manual traders. They don't know how to program. They find the pattern, they know how to trade, but they're not a programmer, right? So this can make everything easier, like just our slogan, like trade simple, to make it easier to make profits. This is perfect, right? Even for DeFi's, right? You see that if you want to try DeFi's and you want to set up a position, but you cannot quickly take the profit. You have to manually enter 2 orders, and you may lose the opportunity. But now with the bracket order, just one click, you can send an order and everything set up for you. Right. This is great, and it gives a lot of potential to day traders that they can try that out, and without worrying about lose the opportunity to those bots.
Awesome.
So, well, that would be about it about the bracket order. And actually, Jack, Koroush, Ryan, Scott, Josh, thank you for this great discussion about altcoins and about bracket order. I feel like I have learned so much from you, and I bet all of the viewers did. And before we finish, some of the viewers have posted some questions for you in the comment sections of this live stream, and it would be great if you could give us a brief answer to some of them. And the questions we pick actually won a $50 trading bonus. So please contact us on Twitter to receive the bonus. And yeah, Koroush, if you can take over.
Sure. So we've got a few interesting questions. One of my favorites so far was, now I will read it as written. Why ignore some FAs though? Got to trade all types of information, but I can see how that can be some noise. So that's one of the questions we have, which goes back to what Ryan and I were discussing earlier with regards to, well, Ryan specifically alluded to not ignoring, but letting someone else do the FA side so he can focus on the specific measurable information. The more you can reduce the number of variables that go into your trading system, the more clear it can be, the more easy it can be to form decisions. Generally, that is my understanding, and my approach, like I said, is binary. Binary means 0 or 1. Either it passes my fundamental test and I trade it, or it doesn't pass my fundamental test and I don't trade it. So that is my approach, and it comes from humility. I know that there are people far more suited to determining the success of these projects than I am. So I let them handle that side, and I focus on where my edge and expertise lie, which is in analyzing the technical data. If anyone would like to add to this.
Great point.
I think it's a differentiation between trading and investing, which goes back to sort of a lot of things that we've touched on here. I think that if you truly believe in a project and its fundamentals and you think it changes the world, then you take a small position, you put it away and forget about it. But if you're trading, the fundamentals are completely irrelevant, because nothing in those fundamentals is going to alter the price action in the short period of time that you're trading. So I think to a large degree, that's the reason that it's just not really on the radar. That said, to a degree, and it is also something we touched on, since there are no quarterly earnings reports and P&Ls and things in crypto, we don't really know what these companies are doing. The community and the social aspect of it is largely what I view as the fundamentals. So that there are tools that I've seen that are extremely, extremely compelling for gauging social sentiment and trading on it. So if you want to view quote unquote fundamentals, it goes kind of back to what Ryan said, and that really is about the community behind the coin. You can see that passion. It's very easy to quantify using tools like Lunar Crush and other social sentiment platforms, which ones are the most hyped at any given time, and that can give you the momentum to compel you to take a trade. But once you take the trade, I mean, it doesn't really matter if, it's a baby unicorn farm or if they're curing cancer. At the end of the day, it's all the same. It's all the same. You're looking to make money, make Bitcoin, make dollars. If you're viewing it, strictly from fundamentals, then switch gears and become an investor and not a trader, and be willing to become one of those passionate community members at minus 90% that I sort of discussed earlier.
Yeah.
Perfect. Thank you for the answers, everyone. And Victoria, are we taking 2 or 3 questions?
3 questions in total, maybe.
3 questions in total. Okay, then the next question we have, I'm going to pass on to the rest of the panel. Can you venture into a coin which has weak or bad governance?
Yeah,
I wouldn't even know if it did or didn't. Go ahead, Ryan. Sorry, I wouldn't even know. So yes,
it's not my wheelhouse. But this is the kind of things that I trust Josh for. I don't know enough about governance, and that alone to me is enough to scare me out of making any decisions in the space. So if it doesn't strike me as something that I immediately know, something I'm immediately familiar with, I can't really see myself being in a position longer than a few hours. So that's the gap in my understanding governance right there. So I'm sure this is better handled by Josh.
Yeah,
Sorry, Josh.
No, I mean, a lot of times too, you're looking for assets that have governance that allow the community to make decisions, right? And so basically that's a positive, because if you're leaving everything into the developer's hands, there's more risk for like exit scam, right? And so, but if you have the ability to govern an asset in a community through voting, through those mechanisms, for example, a conflict of interest, right? I own the asset YFL, I've talked about it. They're trying to set up a strong governance to where even now they're voting on the treasury, what the devs hold, what the team hold, to be able to pay out to build a product, right? And it's up to the community to be able to vote for that in order to build that product. And so if that vote goes through, naturally the money goes to the team to pay for that. But in the end, you may have a stronger product and stronger fundamentals behind that to drive the price up. So I do think governance can be very important. I think that you have to watch out because, again, there's so much risk here. Really, you can't trust anybody, right? There's very few people you can trust. And I think it is important fundamentally to have good governance behind an asset to where the community is helping make decisions to drive that forward. If there's one person who has a lot of power, yeah, you definitely need to be very wary of that. And you need to definitely have good risk management and maybe not go all in on that one. Don't go all in on anything, but you definitely need to be careful. Hopefully that helps.
Well, that was a pretty fantastic.
Yeah, what I want to add is that there's a lot of like a marketing strategy when they use the governments to advertise their platform. That's something the investor has to consider. And the government's the value of the government's token is not proved. But one thing is true is that if that they when they issue the token, that they have a very strict rule on the locking period, over the locking period. That's something maybe better than there's no restriction to the locked token to shorter term the lock token period platforms. So that's something that's give. So for the long term, that if the developer or the main developer contributor cannot get rich immediately, maybe he has long-term interest to keep contribute to the project, right? But overall, that the value of the government token hadn't been proved yet. Right. So what's the true value? I can't think of one government token really useful. Usually that still there's a big majority of the token controlled by a few institution or a few individuals, and they are dominated the platform change. And if there's very decentralized governance token, and we haven't seen proved cases that the entire community can be united to drive. Bitcoin is kind of an example, right? The community is so diversified, and it's hard to make any big change with all with agreement from the entire community. So that's something we have to look into the value. I have little doubt of the community token, but I think that if overall, if the token lockdown time is longer than some other token platform, and maybe it's a better choice.
Okay, well, we've just got fantastic answers to that question from the Blockroot's fundamental expert and the CEO of Phemex. So hopefully that helps. Now we have one question left before I hand it over to Victoria to finish this podcast off. And we thought we'd end it on a slighter, more fun note. Someone has asked, let me get that question up. Final question, so suited to our final question. What is the meaning of life? So we can tone it down.
42. I was 42.
So we tone it down a bit. We can have a bit of fun here. I'm going to give a quick answer because we can ramble on from this. My answer to the meaning of life would be you're here to consciously experience life. Make sure you have more of a positive impact than a negative one, and try and enjoy yourself. So that's my answer. If everyone wants to go around and give theirs as well.
Yeah, I think that's a great way to say it. I'd like to boil it down simple too. Leave the place nicer than when you came. Right. So leave something of value and of substance. And that's really it. You know, family, friends, good experiences, that's what counts. And trust me, I could tell you, you know, from being in markets for a long time that, you know, those are the most important things at the end of the day.
Yeah, no, I mean, for me personally, you know, my faith is important to me. So, you know, that to the higher power behind kind of a foundation and meaning, but really that comes from loving other people, treating other people, you know, how you want to be treated, and just bringing value and just helping others, which is based off that foundation for sure.
What they said.
Yeah, Scott, please.
Yeah, what they said. I agree with everything you guys said for the individual. I mean, in the grand scheme of things, the meaning of life is there's probably none, and we're just atoms floating around, whatever. But a much deeper and philosophical conversation. But as for the individual, obviously, the meaning of life is to be happy and make those around you happy. I don't see I've been there, but I don't see a reason to ever really be negative or dwell on negative things. Every moment that you're, unhappy, unless it's a, outside circumstance, of course, there's going to be times, but mostly it's a choice, and that is something that you can change, very, that you have control over. So I would say just, stay positive and, be happy and make the people around you happy. And, hopefully that has a ripple effect. They make the people around them happy. And we leave the place, as Ryan said, better than when we came.
Mine is quite similar to Scott's. I think it's a meaning of life. It's just experiences. So, right. So you only live once, and just do your best to try everything and do the right thing and make everyone around you happy. And that's one, I think, tech lectures talking about happiness, and the most happy person in the world is that the people around him feel happy, right? So that's his value, right? And life is a journey, and whatever you learned, and if you can use it, and do your best to make something a little bit better.
Perfect. Well, thank you for answering the extremely easy question of what is the meaning of life, everyone. That is the end of my hosting. I hope listeners have enjoyed it, and we'll potentially see everyone again in the future. Thank you, Phemex team, for having me. Thank you, amazing panel members, for being here. And I'm going to hand it over to Victoria to finish us off.
Yeah, so thank you about it. Thank you for this conversation, and thank you for today from us. We are done with the second episode of the Phemex Crypto Talk. A special thank you to everyone who has joined us today and took part in the live stream. We really appreciate your support, and we hope to see you again during the next third episode of Phemex Crypto Talk real soon. And special thanks again to our guests. You were all amazing, and we will be looking forward to meeting with you again and learning from you in the future. So thank you, and see you all next time. Bye.
Thank you, guys. Have a great day, guys.
Bye.